Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The focus of my presentation and the focus of the Options-Doug chat channel in Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day in a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow and price action to confirm my thesis and for setups, for entries and exits. And this is very important today. Planning was totally out of sync with what happened today. So the second part of my process, the execution, watching real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero was the key for today. And one other note, I'm going to talk about setups and underlyings, and the way that you would typically trade is totally up to you, whether you want to trade shares, futures, or options. I'm just talking about the underlying, and my positional analysis, my analysis is based on the options market, and also my execution is based in large part on what options traders and market makers are doing, as well as order flow. But again, I'm talking about underlyings, but you can take the trades any way that you prefer. Again, options, long or short, spreads, shares, or futures. All right, and questions and comments are welcome, and I will be watching both the Options-Doug chat channel in Discord as well as the chat in YouTube for your questions and comments. All right, let's get started. What I want to talk about today is news items coming out for the rest of the week. I'll talk about my positional analysis for today, talk about my plan, and then go over some setups. So first of all, tomorrow is a stock market holiday, and the futures apparently close early as well. So this is the CME website, and it looks like this close for Friday is at 8:15 Central Time. So that is for futures, and of course it is a stock market holiday, and the employment report that normally comes out on the first Friday of the month will come out as usual at 8:30 a.m. Eastern Time. All right, so that is the rest of the week. Then I believe next week there's a CPI report coming out. I'll talk more about that on Monday. All right, let's take a look at our charts now. Start with the positional analysis. This is the S&P 500 futures, ES futures. And before I dig into this chart, I'm going to take a look at a larger time frame. This is the S&P 500 index, SPX, showing a 20-day 1-hour chart on Thinkorswim just showing price and spot gamma levels. These are the key levels. And let me point out a couple of the primary levels here. This is the put wall. That's the strike with the largest net negative gamma that can be expected to act as support, and that is certainly not in play for today. Here's the 4,000 level. That is the key gamma strike or absolute gamma strike, the strike with the largest absolute gamma. And then a level that is in play today is the volatility trigger at 40.95. That is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative, and they have to trade futures with price to hedge their delta exposure. That tends to increase volatility, and above that level, their position on the gamma curve is positive, and they have to trade against price to hedge their delta exposure, and that tends to subdue volatility. And then finally, the other primary level is the call wall at 4,200, the strike with the largest net positive gamma that can be expected to act as resistance. And note that did move up from 41.50 yesterday to 4,200. So this is price. These are the primary levels. Now let's take a look at a 1 day, 1 minute chart, again in Thinkorswim. And these are showing the levels that are in play for today. And primarily this group of levels around SPX 4100. There's the volatility trigger at 40.95. Note SPX is trading above that level now. And the 4100 level. And then there's the zero gamma level at 4101. All right, so those are the levels that are in play for today. Now let's take a look at Bookmap. And I have two columns of notes here showing these levels. This column, the SG column, is from Spotgamma. So Spotgamma provides these levels to subscribers for a variety of platforms. I use Thinkorswim and Bookmap. And this is showing, again, these key gamma levels, SPX levels, converted to an equivalent SPX price. Right now, Spotgamma is using a 35-point difference between ES and SPX, and I calculated that difference at about 27 points. So my levels are a little bit different, and I'm showing those in my column of cloud notes here. And so here are the same levels shifted down to what is closer to what's actually going on today. The 4100 level noted as resistance in the Spotgamma AM Founders note. And then there's the 40.95 volatility trigger level. And then also I have SPY levels here. This is the 408 call wall key gamma strike. And that typically acts as resistance. It did not today. And one other note here. Let's just take a look at the SPY chart, and this will become more clear. Support levels just around the 406 volatility trigger. And I'm showing these key gamma levels in my cloud notes here. Here's the 408 call wall key gamma strike. And then I also have SPX levels. There's the 40.95 volatility trigger and the 4100 resistance. And after about 11 a.m., when the S&P 500 broke above the VWAP, it's been a straight uptrend, and so far continuing higher. All right, let's talk about shifts in levels now. And for SPX, the volatility trigger did shift up from 40.55 to 40.95, and the call wall, as I mentioned before, also shifted higher from 41.50 to 4200, and I interpret both of those as bullish. And then on the other hand, SPY, the volatility trigger, dropped from 410 to 406. The call wall dropped from 414 to 408, and the key gamma strike dropped from 410 to 408. So I interpret that as bearish. So kind of a mixed picture on the S&P 500 here. And then for QQQ, the numbers have been, the key daily levels have been a little bit strange, moving around quite a bit. So anyway, if just using the levels today as they are, the volatility trigger for QQQ shifted higher, the put wall shifted higher, the call wall shifted lower, and the key gamma strike shifted higher. And overall, I interpret that as somewhat bullish. All right, let's take a look at the gamma charts, and we'll see where those levels are come from. So this is part of the new dashboard. This is showing a lot of index charts. This is for SPX, and I'm going to look at this absolute gamma chart first over on the upper right corner. And what this is showing is positive gamma or call gamma. This is market maker's position at these strikes above the zero line that's shown by the orange bars. Again, that's positive gamma or call gamma. And then below the zero line, that's negative gamma or put gamma. And the key levels, there's the 4,000 strike. That's the strike with the largest absolute gamma, and that is the strike. Absolute gamma strike has been at 4,000 for a long time. Here's the 3,800 put wall. Again, the strike with the largest net negative gamma can be expected to act as support. And here is the 4,200 level. That's the strike with the largest net positive gamma, and that can be expected to act as resistance. So that's SPX. And again, just showing where the levels that I discussed earlier come from. Here's SPY. Let's zoom in on this. And for SPY, actually, this may help see this more clearly. So again, positive gamma or call gamma shown by the orange bars, negative gamma or put gamma shown by the blue bars, and there's the 408 strike, and that is the key gamma strike as well as the call wall. And note, price is trading above that level now. All right, then the put wall is down at 400, the strike with the largest net negative gamma. And let's look at QQQ. I have to refresh the page. Zoom in on this. And for QQQ right now, whoops. All right, there we go. All right, for QQQ, There's the 315 strike. That's the key gamma strike. And there's 320, the call wall. That's pretty obvious. And then 300, the put wall. All right, so those are the key daily levels for both the S&P 500 and the NASDAQ. Right now I want to look at the Vanna model, the Vanna charts. We'll zoom in on this as well. This is for SPX, and there are two lines here. And this is showing how market makers' delta notional, shown on the vertical axis, changes with price. That's shown by this light gray line. Right here. So again, this is showing how market makers' delta notional changes with changes in price, shown in the horizontal axis. And what this is showing is above around, say around this level. And remember, the volatility trigger is at 40.95. So above that level, market makers' delta notional will increase as price increases, and they have to sell futures to hedge their delta exposure. And then on the other hand, below that level, as price decreases, they have to sell futures. So above that level, they're trading against price, and below that level, they're trading with price to hedge their delta exposure. All right, so that's just considering delta, and now the pink line is what we really want to consider. That's considering a change in implied volatility. So this is showing, again, above, around the, again, the 4100, 4095 level. Market makers' delta notional will increase, and they have to sell futures to hedge their delta exposure. And then as price moves down below that level, as price drops and implied volatility increases, they have to sell futures to hedge their delta exposure. And that's in a negative gamma environment. And this is pretty typical. So again, the implied volatility increases their need to sell futures. It shows how their delta notional will increase. So above this level, market makers' position on the gamma curve again is positive. That means that traders are short calls, market makers are long calls, hence the positive gamma position on the gamma curve. And then below, their position is negative gamma, so that means that traders are long puts, market makers are short puts, and their delta notional will increase as price drops and implied volatility increases, and they have to again sell future to hedge their delta exposure. All right, so that's SPX, and we'll just take a quick look at the other indices. There's SPY. And there's QQQ. All right, pretty similar curves for the indices. All right, let's take a look at data. We'll also take a look at gamma notional. And just note here that right now, at the beginning of the day, this gamma notional was positive for SPX, SPY, and QQQ. So market makers' position on the gamma curve was positive. Again, Spotgamma assuming that traders are short calls, market makers are long calls, and they have to trade against price to hedge their delta exposure. And that typically tends to subdue volatility. All right, finally, let's take a look at, so that's my most of my preparation planning for the indexes, S&P 500 and NASDAQ. And here's what I use as a starting point for stocks. These are all the stocks on my watch list, and I track the key gamma strike, and I compare the current key gamma strike that's shown in the D column with the previous key gamma strike. That's from yesterday. I'm looking at how these levels change, and then I color code, just for a quick visual reference, color code these numbers. Red indicates that the level dropped from the previous day, and green indicates that the level increased from the previous day, shown here with QQQ. So mostly red today. All right, so based on this, my thesis for the day for stocks was generally bearish, and that turned out to be wrong. So sometimes this works, it often does. Today it didn't, so that's why I said at the beginning, the second step of my process, the confirmation of thesis with order flow and hedging flow, is very important. All right, let's take a look at some setups. So I'm going to start with Apple, and I'm looking at stocks that where hedging flow, Spotgamma levels come into play, and there were certainly other stocks as well. So we'll start with Apple, and let's take a look at Spotgamma Hero. And if anybody has any stocks that they want me to take a look at, please let me know. I'll be glad to do that. I may not have them loaded in Bookmap, but we can take a look at in Hero. All right, so here is Apple. Just very strong uptrend today. And traders were buying calls pretty much from the open. And that is shown by this rising orange line. This indicates this is positive delta. Traders are buying calls. And this is, if you're looking to go long on a stock, this is certainly what you want to look for. And the way this works, when traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. And as price continues to increase, they have to continue to buy stock to hedge their delta exposure. And notice how, so Hero was rising in the morning, levels off, price levels off, pulls back, and then continues higher as traders continue to buy calls up until about lunchtime, 12 o'clock Eastern. All right, let's go take a look at Bookmap. And nice steady uptrend. Note the target here, liquidity. There were some traders, it looks like they were front running the liquidity here at 165. That's the call wall, and the key gamma strike, that's the primary target. And it looks like traders are trying to make their way up to that level again. All right, so that's Apple. All right, let's take a look at the next stock on my list. Go back to Hero. And the next stock was AMD. So here it looks like traders were selling puts, and that was driving price action. That's shown by the rising blue line, and not as steady an uptrend as Apple. Let's go take a look at Bookmap. Deeper pullbacks, but you can see the shift in order flow. Here, note the pink dots. Actually, I'll just draw it with this. So this deep pullback down to the point of control, which is just the opening print. That's pretty typical for most stocks. A shift in order flow from pink dots, those are market sell orders, to market buy orders. And then a move back to VWAP. Not a lot of range in AMD today, but a steady uptrend like most other stocks. There were better setups. All right, so that's AMD. And the next was Meta. And just like Apple, really nice, steady uptrend. Mixed order flow, but it's definitely an uptrend. Let's take a look at Hero. Take a look at Meta. Actually, while we're here, let's take a look at Goog. I think it was, no. Hedging flow, not confirming price action. Meta, there we go. Nice steady uptrend. Traders buying calls just like Apple. Market makers selling calls and buying stock to hedge their delta exposure. Let's go take a look at Bookmap again. So there's Meta. Few pullbacks. There's the move above VWAP. And note price is now above the 210 key gamma strike. And for Meta, the only shift in levels was the put wall, which shifted down. Let's just see if there are any levels up above. Actually, let me just check my spreadsheet. All right, for Meta, the call wall is at 220. So that's up here, call wall at 220. Note the high liquidity at that level. And just below the upper edge of the expected move for the week. That's based on the options market. And hello, John. And YouTube ask, what is the 210 key gamma strike? KGS. KGS is the key gamma strike. That's the strike with the largest absolute gamma that can be expected to act as support, resistance, or a magnet for price. And then the call wall up above is the strike with the largest net positive gamma that can be expected to act as resistance. And let's just go, we'll take a look in Equity Hub and I'll show you where those levels come from. So again, right now traders continue to buy calls in Meta. And let's take a look. Take a look at Meta and Equity Hub here, and I'll show you where those levels come from. If you, well, first of all, John, these levels are available to Spotgamma subscribers. So this is a proprietary subscription-based tool that I use. And I can show you where those levels come from, or where you can see them. So first of all, the easiest way is this history, showing the key daily levels every day. This is the last 10 days. So there's the key gamma strike at 210, the call wall at 220. Those are the levels that are in play for today. And you can also see the levels on this chart. And this is similar to the index absolute gamma level charts that I showed earlier in the presentation. And this is for Meta. And there's the key gamma strike. Again, positive gamma or call gamma above that line. And here's put gamma. So one difference between an index and a single stock is the assumption that Spotgamma makes. For an index, Spotgamma assumes that traders are long puts and or short calls, and market makers have the opposite side of that position, so they are short puts and long calls. For a single stock, Spotgamma assumes that traders are long calls and or long puts, and market makers are short calls and short puts. But anyway, this is the call gamma. There's the key gamma strike at 210. That's the absolute gamma strike. Here's the call wall at 220. Same idea, strike with the largest net positive gamma. Or the strike with the largest call gamma for a single stock. And here's the put wall and the hedge wall down at 175. And John asks, what is your favorite stock to trade? I would say all these on the list are my favorite stocks. I recently have had good results with NVIDIA, but I trade Microsoft, Meta, NVIDIA, Tesla, and the indices, SPY and QQQ. Those are primarily the stocks that I trade. All right, so that's where those levels come from. There's Meta. Traders continue to buy calls. And let's just take a look at something. Let's shift this back to the total signal. And I'm going to look at next expiry. And this is for a single stock. This would be showing typically the Friday expiration, but today is the last trading day of the week, so this is the Thursday expiration, and this is showing that over the half of the trade today is in options that expire today. So that's 84 million, almost 85 million versus 140 million. So these are trades that expire today, and these are trades, all the trades that expire today as well as further out. So most likely most of those trades above the 0 DTE above the 0 DTE is probably the April monthly expiration. And John asks, is there a stock more predictable and easier to trade? And not really. That's why I have a number of stocks on my watch list, and I'm just looking from day to day. I would say if you're using Hero, hedging impact of real-time options, as a trading signal, Tesla is one that almost always shows a very strong correlation between hedging flow and price action. And we'll take a look at Tesla in a couple minutes. All right, so that's Meta. And so far, both all Apple, AMD, and Meta have all been very good stocks with order flow and hedging flow confirming the price action. Microsoft can be a little bit more difficult to read. So there's Microsoft. See, there's not nearly as strong a correlation. Traders start buying calls, almost 11:45. At that time, they stop buying puts, start selling puts. Or they stop selling puts and start buying puts. I'm sorry. So rising orange line, traders buying calls. Falling blue line, traders are buying puts. So not as clear as the other stocks that I looked at. Let's go to Bookmap. There's Microsoft. Really nice uptrend. And remember, Microsoft was on the list of stocks with a falling key gamma strike, and that did not help today. All right, so here is the primary target from this morning, the 290 call wall key gamma strike. Note the high liquidity in there. That acts as a magnet for price. And price continues higher. Traders just really want to be long today. And John asks, what are the numbers below? I'm not sure what are you asking about these numbers right here, the green and purple numbers? If so, that is the there are two indicators that I have on chart here, absorption and sweeps. So the bright green number, that's a buy sweep, aggressive buyers. And this purple line is, or purple number, is absorption. That is passive orders. So the bright green is aggressive buyers, and the purple number is absorption. Those are passive sell orders. And then on the other hand, here with this bright red and light blue line, so the bright red is a sell sweep, and those are aggressive sellers being absorbed by passive buyers. So that's what those numbers mean. Again, the bright red and green are aggressive orders, and then the purple and light blue are passive orders. And that's the absorption and sweeps indicator that I'm showing on chart here. All right, so that's Microsoft. And the next is NVIDIA. And for NVIDIA, both the hedge wall and put wall drop lower. I was initially a little bearish on NVIDIA, and that actually did yield about a 1.5 move lower, shown right around here, but the overall trend was definitely bullish, with this 270 key gamma strike being the primary target. And note the reversal in the morning at the 265 put wall and hedge wall. And again, it acted as support as expected. And John, if you're a Bookmap subscriber, these indicators are available. I believe they may be available to Global Plus subscribers. I'm not certain. So first of all, you have to be a Bookmap subscriber, and if that's the case, then you can look on the Bookmap website, and depending on the type of subscription that you have, they might be available to you. All right, so there's NVIDIA. Let's take a look at Hero. So overall, uptrend today, but deeper pullbacks. And one way of looking at this is deep pullbacks to VWAP. And note the absorption there at the 268 level, just above VWAP. And again, hitting the 270 key gamma strike target. Let's go take a look at Hero. There's NVIDIA. I'm going to zoom in on this. So this is what I saw in the morning, and I thought this was going to confirm a short setup. It did for again, a 1.5 or something like that, with this falling hero line, falling purple line, and then price follows. A little bit lower, but there's no follow through to the downside. So options traders turn around. They start buying this dip, taking positive delta positions, and price moves higher. Zoom out. Let's see what traders were doing. Separate out puts and calls. So it looks like call buyers driving. So in this case, traders are buying calls, and on net they've been buying puts, but the call buyers are winning. And you can see the strong correlation between call buying, call trading, and in price action. Rising orange line, traders buying calls, price increases. They start selling calls, price drops a bit. They start buying calls again and price moves higher. That's NVIDIA. And Floyd's Garage says Hero is Spotgamma. That's correct. Hero is available to Spotgamma Alpha subscribers. So that's NVIDIA. Let's take a look at Snowflake. Another strong stock today. Very strong correlation between hedging flow and price action. Traders are buying calls and selling puts. Let's go take a look at Bookmap. Note the sharp drop and the absorption at the 141 level. Then price reverses higher. Does a retest of VWAP. And now is trading above the 145 put wall hedge wall. All right, that's Snowflake. Now let's take a look at the S&P 500. So there it is, SPY. There's the reversal higher at, zoom in to from about 9 o'clock to current price. There's the reversal at the 406 volatility trigger. Reversal higher. Then a deep pullback below VWAP. And then around 11 o'clock, price got going and started moving higher. Brief pause at the 408 call wall key gamma strike. And then a brief pause at the 4100 level. And now it looks like the next level in play may be the 410 large gamma LG1, meaning that's the largest amount of gamma, the ranking 1 to 5, 1 is the highest. And yesterday 410 was the key gamma strike. All right, let's take a look at Hero. And for Hero, I'm going to take a look first at SPX separately, and then I'll look at a combined signal of SPY and SPX. And here there's a very strong correlation between options trades, hedging flow, and price action in SPX. And as usual, traders are buying calls and buying puts, but the call buyers are definitely winning today. And note the strong signal in calls, rising call buyers. It's been continuous all day. And you can compare this number right here, this notional value, that's 1.6 billion versus minus 187 million. So call buyers are definitely in charge today. And this is just SPX. And this appears to be what is driving price today. Let's go back to the total signal. Now let's just take a look at the next expiry. And this is pretty close also. This is the purple line is showing all expirations. And this kind of greenish teal line is showing options that expire today. So this is total 1.37 billion versus 944 million for 0 DTE. So a good portion of the trade today is in options that expire at the end of the day. And that's for SPX. Let's take a look at SPY. And SPY tells a different story. And overall, this is negative delta minus 711 million. And SPY traders are, it's kind of choppy, but they're generally fading the move. They were buying puts. So this is 832 million notional value, negative 832 million buying puts versus 145 million. All right, so that is the SPY signal. Now let's take a look at the combined signal. And I'm going to look at the signal for the S&P 500. And this is again showing the combined signal for SPY and SPX, the two separate signals that we just looked at. And this is the combined signal, and showing in this case that this is positive delta, positive 835 million. Let's separate out puts and calls. And showing that call buyers are in charge today. Almost 1.8 billion versus minus 940 million. So call buyers in the S&P 500 are in charge, and mainly the SPX call buyers, as we saw before when we looked at the separate signals for SPX and SPY. So sometimes you have to do a little digging to figure out what is actually driving price action. All right, and this is the signal if I'm trading the S&P 500, whether that's futures or SPY shares or SPY options or SPX options. This is a signal that I typically look at. This is the total picture. All right, let's take a look at Bookmap now. We've looked at SPY, and let's take a look at the S&P 500 futures. And I'm going to go take a look at a couple of other charts. This is just the Thinkorswim chart, just SPX. So it looks like this next level in play is this 4123 level. And I don't know if I have that on in my SPY chart. Let me see. I don't think I have that. I marked most of the SPX levels on my chart. And no, I don't. Yeah, actually I do. So let's go see where that level is. Again, let's go back to SPY. So there, the next levels in play are the 410 large gamma 1, and then also the 4123 SPX 4123 combo 5 level. So price continues to move higher. All right, let's wrap it up. Let's take a look at Tesla. And for Tesla, my initial thesis for the day was bearish. The key gamma strike, hedge wall, and put wall all dropped, but that certainly didn't work out. And you can see the reversal higher at the 180 put wall. And let's zoom in a little bit. So we can see this. And John, here's your absorption and sweeps indicators. Note the small green dots here. That's a buy sweep at the 180 put wall level. Price starts to make higher lows, does one final pullback, and then shoots straight up. Note the green dots here, all these market buy orders. This is definitely bullish order flow. Moving up to the 185 hedge wall target. Price drops a couple points, chops around just above VWAP, and then continues to move higher. All right, let's take a look at Hero now. All right, so that's, again, the total signal for SPX and SPY. Then we'll wrap it up with Tesla. And let's see what traders were doing. Buying calls. So when you break out the puts and calls, this gives a more clear signal. And this is what we've seen on several stocks today. Traders are buying calls, driving price action higher. Note they're buying calls pretty much from the open, even as price drops. And let's just see. So I have puts and calls, and this is then also showing the 0 DTE. And the legend is up here in the upper left corner. So next expiry calls are shown with this green line here. And note almost all of the call buyers today are buying calls that expire at the end of the day. And the same for the puts. So net traders are buying calls and selling puts, but called buyers, and especially 0 DTE call buyers, are driving Tesla higher today. All right, let's clean this up. Go to the total signal. So again, this is a case where separating out puts and calls gives a lot of clarity. All right, so that's all I have today. A lot of bullish setups. Apple, AMD, Meta, Microsoft, Nvidia, Snowflake, S&P 500, Tesla, all strong today. Anyway, again, that's all I have. I want to thank you for watching. Thanks for your questions and comments. And have a great weekend. Again, remember, tomorrow I will not be streaming. It's a market holiday, and I'll be back on Monday. All right. Thanks again. Bye.